SoFi stock, the AWS of Fintech, is finally profitable with student loan repayments back in full swing and massive growth in their member base. SoFi is evolving from a niche lender into a diversified banking powerhouse. SoFi is growing revenue at a rapid rate, 35% year over year, becoming net income positive back in 2024. Investors are paying a premium for this stock because of the high growth rate and expectations. Price to sales of 8 compared to the industry average of 1.3 in the financial services credit sector. But remember, SoFi is part of the credit services sector and financial industry. These legacy companies are dealing with legacy vendors and providers. The shining beacon of SoFi is that they own their own tech stack. SoFi is vertically integrated after acquiring Galileo and Technisys. Galileo is the payments platform which handles card issuance and transaction processing. Technisys is their banking core. Instead of relying on outdated vendors for a core system, SoFi owns their own modern core to track their ledger. This ownership of the tech stack promotes cost efficiency and speed of innovation, something you cannot get at a traditional bank, which can justify the premium in stock price in SoFi if SoFi can prove membership growth continues and keep charge-offs in line. On udomo.com, we can easily see SoFi's tremendous revenue and net income growth with 3.61 billion in revenue and 525 million in net income in 2025. This is an annual revenue increase of 35%, higher than 2024 at 26%. We can compare SoFi's revenue growth rate compared to the credit service sector average. Here we see SoFi is growing way faster compared to the sector average, 35% compared to just 10%. SoFi's vertical tech stack create production effects, enabling SoFi to bring in more loans and shares. We can also compare the sector average price to sales and price to earnings compared to SoFi. This tech-first approach in banking classifies SoFi as a disruptor of their industry. Such disruptors have 10x potential because they are doing what others will not. SoFi is a risk just like anything else with investing. This is not financial advice. I am only sharing with you my personal opinion. The painful truth is that traditional financial institutions rely on legacy vendors for immediate banking solutions. Yes, that may levy immediate needs. However, this can be limiting because now another company owns your process, making it difficult to rip out and replace if a bank needs to pivot. SoFi owns their own tech stack, enabling them to pivot the change their process as they please. I personally like SoFi stock.